Hey guys, it's Jason Alexander, and today I'm with Luke.collins, or that's at least what you said your name was, right?
Yeah, that's what they call me.
Luke.collins with Goosehead Insurance. We're going to chat about insurance today and get to know Mr. Luke.collins. Luke,
Thank you for having me. Appreciate you
thanks for coming
setting
on.
this up. Yeah.
So, big first question, insurance. How long have you been in insurance?
Been in insurance for almost 4 years now.
Okay.
So moved to Bentonville in 2020, middle of COVID, and decided to start an insurance agency, a brokerage model. So been doing it for almost 4 years now.
So you started that.
It's a franchise model.
Okay.
And so we are the largest independent broker in the United States. And so they headquartered in Texas. And so they were expanding to Arkansas. So I got a franchise and opened up an agency here. So,
Nice.
Yeah.
And what did you do before insurance?
For insurance, I owned a storage and transportation company in Texas for about 4 years. And then before that, I was in oil and gas, did business development for about 12 years.
Really?
Yeah.
And so let's slow it down real quick. So right before insurance, you were into what? Say it again. Storage
and transportation. So.
And what was that like?
It was good. I mean, the model was kind of a full service on-demand storage company.
Yeah.
So you would, basically our motto is never step foot in a storage unit again. So you would call us and we'd come to your home or business and barcode and photograph the stuff that you wanted stored. We'd load it on our truck, take it to a warehouse and store it. And then when you wanted something, you'd log into your account. You had a photo inventory.
Really?
If you want your Christmas decorations, you'd click on them. If you want your couch, whatever, you click on it, and we'd schedule a delivery back to your home.
Do you still run that business at all?
I exited that in 2020 and then moved to Arkansas.
Yeah. Okay. And what brought you to Arkansas?
So my wife is from Arkansas, and she, my parents live over in Tulsa, and so she wanted to get closer to family and stuff, and so we wanted to just kind of get out of the city, out of Dallas, and just we'd been to Northwest Arkansas a few times and just kind of fell in love with the area. Knew we wanted to move here. So at
that time, are you into mountain biking or anything that?
I wasn't, but I am now. I think once you move here, it's kind of you've got to buy a mountain bike.
They give you a bike rack at the border, right?
Yeah.
And here's your standard bike rack, whether or not you own a bike or not.
Yeah.
You got to have one.
I didn't quite understand the last mountain bike I had, I think I bought for $300 at Walmart. And so the sticker prices were quite a bit different, but if you want to get a good one. But I've gotten into it, so I do mountain bike. My boys are getting into it. I've got 2 boys that are 5 and 8. Nice. So they're getting into biking some. But yeah, I really enjoy that.
I don't think I realized that you got 2 boys, 5 and 8, because my boys are 8 and 9.
Okay.
And I don't think we probably touched on it in a conversation, but we're always passing in an open house or some real estate event and whatnot. So what kind of mountain biking do you guys do? Like gravel or like trail?
Trails, mainly trails.
Okay.
Yeah. I mean, there's a figure 8 loop in Bentonville over where we live, really close to the schools, kind of south of the Bentonville Community Center.
Okay.
And so we ride on that quite a bit. It's pretty flat, but there's some little jumps and elevation changes on it. But I like to go out to the some of the trails over by Crystal Bridges and up in Bella Vista sometimes.
So are you on a standard bike or e-bike?
Standard bike.
Okay.
I'm not old enough for an e-bike yet.
Hey, I don't know what you're trying to say. I just got mine and I'm hooked.
I'll tell you, I do get tired of climbing, so there could be some benefits there to the e-bike, but I think I've got a specialized, but it's a great bike.
What I like doing is I like towing the boys. So that's what's got me into it. Is we can session some downhill runs and some jumps and stuff over and over and over again, because you know how it gets. Kids complain. It's like the Trail of Tears. Right. So that's what I like now, is being able to pull the towee with them and tow them and do some sessions.
Huh.
So what got you into insurance? Why the jump from Texas to Arkansas? Why insurance?
Yeah. So after I exited the business in Dallas, I wasn't quite sure what I was going to do. And I knew, I was in corporate oil and gas for 12 years and then had started that other business and knew that I wanted to own a business again. And so really just kind of started, looking for what opportunities were out there, started looking at franchise opportunities. When I read an article in Forbes about Goosehead Insurance and the founders that had started it and they were the #1 insurance franchise in the United States and really starting to expand. And so I set up a call with them and just really kind of fell in love with the idea of helping people secure and basically insure typically their most valuable assets, right? And protecting that. So, so we just jumped head in on that, and then moved here, in the middle of COVID, and started my agency, which, was a tough time, because a lot of people weren't meeting with people, and so you've got to network and develop leads, and so just jumped right in. But it's been a great experience and a great transition. So.
And Goosehead Insurance, do you guys just do homeowners insurance, or do you car?
No, we do everything. So we're a broker. So we sell for A-rated carriers. So being the largest independent broker in the United States, we have access to a lot of different companies. So we sell for, Allstate, Nationwide, Travelers, Progressive, Safeco. And so we always start with the home, but then we sell all the other products, home, auto, boat, flood, motorcycle. Yeah. So anything property and casualty associated. So
nice.
Yeah.
So up until, I would say, last year, because I feel like last year it has been this kind of anomaly in the last decade, right? Mm-hmm. With interest rates going up the most in the last decade, and you're starting to see shifting markets. Some people are having the best year of their life in real estate, and some people are having the worst year of their life in real estate. You guys pertaining to insurance, or you pertaining to insurance, what did you see last year? What are you seeing right now pertaining to real estate?
Yeah, so
transactions, all that good hoopla.
Yeah, so great question. So the insurance market is, I would say, the hardest it's been in probably 20 years. Mm-hmm. So what we're seeing, and I'm sure what consumers are seeing, is they're seeing their rates go up. They're paying more for home insurance than they've ever paid before. Their auto insurance rates are up more than auto insurance is outpacing inflation by more than double. And so kind of the driver behind those two things is, one, when you look at home insurance, right, nobody saw what was going to happen with inflation when COVID hit, right? And so not only did we see property values go up, but we saw rebuild costs on homes go up because it was costing more. Material costs went up, labor costs went up. And so a lot of these insurance companies had to go back and readjust dwelling coverages on homes, because you used to be able to build a home in Arkansas for $140 a square foot. And now it's $180, depending on the finish outs or whatever. And so in 1980, they started tracking storm losses, billion-dollar storm events in the United States. And so from 1980 to 2018, the average was $8.1 billion storm events a year. Mm-hmm. So these insurance companies were paying out over $1 billion about 8 times a year for storm losses, whether it's floods, droughts, fires, tornadoes, wind and hail. And then from 2018 to 2022, that average jumped up to 18.
We talked about this.
We did.
And the first thing I said was, what was the population back in 1980, upwards of 2000s.
Well, but regardless of, they're still looking, again, inflation has inflated some of those numbers, but the events have gone up essentially, right? And so in 2023, we've experienced $25 billion events this year, $1 billion+ events this year. And so these home insurance companies essentially, so one of Goosehead's executives, she was quoted in the Wall Street Journal recently back in August, basically saying that home insurance companies have lost money 5 out of the last 6 years in the United States. And so obviously they can't continue to operate at losses. Mm-hmm. And so that's why people's home insurance costs are going up. And so when I started in 2020, the average home insurance premium in Arkansas at new business was about $1,200, and it's closer to $2,000 now.
But is it home insurance inflation, like the prices, so say it's a $25 billion event over the next 2 years or whatever you're saying. So what I'm getting at is that kind of like medical insurance, to where like the prices are so inflated what they're sending to insurance companies that they're just milking the dollar? Does that make sense?
Yeah, not necessarily.
I feel like the medical industry is like you get these huge high inflated numbers because the insurance company will pay.
Yeah.
You know what I mean? And is home insurance kind of going down that path to where they're getting this high inflated price tag from the builders or from whoever, and
not necessarily. I mean, what they're looking at is the insurance companies aren't trying to make a profit whenever they have to rebuild somebody's home.
Are you sure?
So, yes.
Just kidding.
I mean, so look at Arkansas, for example.
Mm-hmm. You didn't know that any of these questions were coming.
I didn't. Fair enough. I'm shooting from the hip here.
I like it.
So Arkansas, we ranked third in the country last year for wind and hail claims, right? And so a lot of people, the minimum deductible for a lot of people used to be $1,000. So people, their house gets hit by a hailstorm, they pay $1,000 to the insurance company, and that insurance company spends $20,000 to replace that roof. Mm-hmm. Well, if that client's insurance premium is $1,200 a year, and then they just spend $1,000 deductible, so they're out $2,200 that year on insurance, it's still going to take that insurance company, 12 years or whatever it is to recoup that cost before they're even back to break even. Right.
And then if that client, and then they jump ship and go with a different insurance company,
and then they've lost that money. And so what we're seeing is we've seen some companies go out of business because they didn't have enough cash reserves to pay out on all these claims that have happened between 2018 and 2023 this year. And so that's why we're seeing a lot of premium increases. Like in Arkansas, home insurance companies can file for a rate increase once a year. And State Farm, for example, the largest home insurance company in Arkansas, they filed for a 23% rate increase back in October. So if you have State Farm insurance, when your policy renews next year, your rate's automatically going to go up 23%. And then that doesn't account for any inflation, the rise in how much they may have to change your dwelling coverage. And so, again, the increases cost is really, yes, these companies do have to be profitable, but they're trying to offset the massive amount of losses that they've had to pay out on over the last 5 years.
Yeah. So when we had chatted before, I remember, coming from California, insurance is always an issue. And for the last 5 years, especially like where I was living up in the mountains, we weren't affected by the forest fires, but we could be, and therefore insurance was just through the roof.
Right.
And if you could even get insurance.
Right.
And then, and then flood insurance, even though you're on a mountain, but now half the trees are gone. Yeah. And so when the rains come, it could flood. And it was an uphill battle. It was an uphill conversation no matter what in that particular area of California. I know the majority of California is like that.
Sure.
So coming out here, up until just recently, it seemed like things were pretty black and white. It was easy to get insurance as a real estate agent. I'm helping my buyers get into a home. They're having no hiccups. Just recently, I helped a buyer get into a property, and for the first time they called me and they go, I don't know if we can buy this house. I just got quoted at $6,000 a year. Mm-hmm. How is this possible? And I'm going, let's break this down. Let's figure it out. So they ended up getting a much less payment, a better, policy. Yeah. But nonetheless, it was just kind of the first time where it's reality as far as it's kind of not just in one place or one thing. It's all across the board, and you're going to see it here as well.
Yeah, when somebody
and especially if you're in a flood zone,
right?
You probably know. I know firsthand with my personal property, we bought in a flood zone,
right?
And that was another hoop to jump through.
Yeah, flood zones always, they're not the worst thing in the world, but they always complicate things because if you're getting a mortgage on that home, we run a flood zone. Anytime I quote somebody, our system automatically runs a flood zone determinator that determines what flood zone they're in. And if you're in a high-risk flood zone, your mortgage lender won't loan you money unless you purchase flood insurance. Mm-hmm. So it's a requirement. And so, what we're seeing is, property values haven't really come down at all. Yeah. They've stayed pretty steady. But when the interest rates went up and then the insurance rates went up, right? And somebody's payment where, 2 years ago, 3 years ago, where they may have been able to get insurance for $1,200 a year at a 3% interest rate, they're looking at a 7% interest rate with insurance at $2,400 a year, right? And so what I'm starting to see is a lot more debt to income ratios are tighter for a lot of people, right? So these mortgage lenders and banks or whatever, there's been an education piece where I'm like, you have to start quoting people because they're putting when they're finalizing their numbers, they're putting in a number there for estimated monthly insurance, and they used to be able to get away with $100 a month, but now they're having to use 180, 200, 220, and because it's making that debt to income ratio tighter because interest rates are higher and insurance costs are higher. So
we about had that issue on my primary house. We bought that coming out here to Arkansas. We bought in a flood zone for a reason, because it's farmland. It's a great piece of property, but it's in a flood zone. The majority of it is, and so we knew we were going to have flood insurance. Okay, great, fine. But unfortunately, the processor in this particular with this particular lender didn't account for that the amount, kind of like what you're saying. And so therefore, when it came down to it, she broke it down to where, well, it's going to be $100-something more a month. And so the way, and correct me if I'm wrong, the way they structure it is, so if it's $100 a month, it's $1,200 a year times 30 years over the loan, you're looking at $30K that technically you've got to additionally qualify for, right?
Well, they don't necessarily break it down. What they look at is, your debt to income ratio is a factor of how much, they look at your total debts that you have, the total income that you make, and then how much. Then they factor in, okay, this housing payment with your principal and interest, your insurance and your taxes. What is that monthly cost going to be? And how much does that monthly cost affect your monthly, like, are you, what they're essentially looking at?
Overall,
yeah. Can you pay all your other bills and this new mortgage payment? Because, theoretically your income's going to go up over time, right? And so they don't necessarily look at it over a 30-year period. They just look at it on like an annualized month-to-month basis, right? Can they, with their debt to income ratio, because what they're trying to look at is if they've got these other debts and this income, and then we introduce this monthly mortgage payment, does that put their debt to income ratio over this threshold? In our minds, make it where this house is essentially unaffordable for them. So.
And that's what happened with us. Was it came down to it, and they didn't account for that in the beginning. Even though we knew we were going to have flood insurance. Luckily, we got with another lender. It was lickety split. Mr. Richard Latham.
There you go.
Who's with I think he's with Barrett Financial now.
Okay.
But boy, he closed it in 2 weeks. It was great.
That's great.
And here we are.
So you've been here how long now?
So coming up on 2 years.
Okay.
I mean, we're a year and 11 months. We showed up January 3rd. 2022.
Okay, that's awesome.
It was 18 degrees out. And I was like, we're in Arkansas now.
I guess we made it.
Pulled up in the camper to our new house that we had never seen. And started ripping out the carpet the next day and renovating the house.
There you go. That's awesome.
We were doing it. So 2 years. We like it.
Yeah.
We're mountain bikers, but like kind of with you as far as, kind of going into a new area and having to start over, and you're in a business where you've got to be social and relationships matter and all those great things, and yet you've kind of just got to redo it. And you don't really have that circle and whatnot. So that's we've had a lot of ups and downs the last 2 years, and a lot of great people, a lot of great relationships that we've made. I'm very fortunate to connect in a short period of time. But I mean, like you. Love having you on and connecting with you. So as far as 2024, at this point, I mean, financially, nothing's really going to dip. You're not like talking with lenders. They're like, well, when interest rates dip, things are going to go this and that. But when it comes to insurance, it's really one of those things where it's just going to steadily.
Maybe. I mean, I think what we've got to see, what the insurance carriers got to see, is they've got to start seeing profitability, right? They're all pursuing profitability after all these losses that they've experienced. And, and auto insurance is no different. I mean, last year, 2022 was a 25-year high so the first time in 25 years that accidents and fatalities went up. And so basically what they associated that with is there's more distracted drivers on the road than ever before. So a lot of these insurance companies, when COVID hit, they lowered rates because they were like, oh, people aren't driving as much. And then into 2021, 2022, people got out, started driving more. And essentially what they believe is people just got more addicted to their phones during COVID. So you got all these people that are distracted with their phones, and then accidents and fatalities in 2022 went way up. And then, 2021, 2022 was the first time that you could buy a car and drive it off the lot, and it was worth more than you just paid for it, right? We saw auto values of cars, and then when these accidents would happen, parts were harder to get. They were more expensive. People's cars were in the shop longer, so insurance companies were paying out rental car reimbursement. So we saw kind of a double whammy in 2022, 2023 here with auto rates and with auto insurance and home insurance rates going up. So if there's less storm losses in 2024, these companies start to normalize more, they start to get more towards profitability, then what that will happen is they'll start to want to take on more risk, right? And so they'll get more aggressive in their pricing. But right now, all of them are looking at it like, man, we are trying to lower risk. So a lot of them aren't wanting to take on as much business. They're wanting to get what they call rate adequate. They want to get more premium on the books so that they've got more cash reserves before they start becoming more aggressive in pricing, probably in 2024. So we don't know, right? The hard part is it's hard to predict, if there's going to be a baseball size hailstorm in April or May every year that, you've got to replace, 20,000 roofs with or whatever it is. So those are the factors, just the unknowns of the storm losses. But if auto insurance will get better simply because people's rates are going to go up and people are going to, there's a lot of companies are pushing these telematics programs where you download an app on your phone. We monitor handheld usage. We monitor, braking, fast acceleration. So there's ways that they're incentivizing.
What do you think about all that? I mean, do you use that in your car?
I did. Yeah, I did, because one of the companies I sold it for tracked it for 90 days. The reality is, if you got your phone with you, somebody knows where you're at all times anyway.
Yeah.
So, I mean,
true.
The way that they're using it is they're just trying to incentivize good driving behavior, and then they're trying to reward people with good driving behavior. So you will see good discounted rates, but if you're not a good driver, it can impact your rate the other way too.
So what about like automated cars coming? I mean, if you buy an automated car, say like a Tesla at this point, right? And I know we got more and more coming.
Yeah.
Is that a better insurance rate? Because
that, it hasn't been proven out enough. Yeah, and it's hard in Arkansas. There's too many curves and hills and things. I don't know that it's ever going to fully be automated here, but even if it is, that's 20 years down the road. Yeah. I don't think I probably won't be selling insurance there. So that's somebody else's problem.
So back to business. How many people have you got on your team or in your office?
Yeah, so I've got 4 producers on my team. So and I still quote and sell on a daily basis, and then I've got 4 other team members. So really have grown a lot. I doubled the size of my agency from a premium standpoint and from a producer standpoint this year. And so even though the market's difficult, we are really growing just because we've got a lot of options. And that's the benefit of being a broker is, I don't work for, I noticed there was a State Farm agency next door, and their best interests are always going to be with State Farm. I mean, at the end of the day, they can sell one product, and that's State Farm.
Right.
What I love about being a broker is I work for you, I work for your clients, and my goal is to find you the best cost and coverage on the market.
Yeah.
And then if it changes in 2 or 3 years, because again, we look at these insurance companies, look at profitability, they look at loss ratios, risk tolerance, and say, hey, you know what? Their rates went up. Let's reshop your policies. So you were with Progressive this year, but hey, Travelers has got a great rate now, right? They had a really good quarter. The rates were better. And so I always suggest to clients, it's always good, or really anybody, you should be shopping your insurance rates probably at least every 3 years.
Really?
Yeah.
That's good to know.
Yeah.
That reminds me, I need to shop my rates.
I know a guy.
I'm coming up on 2, and I'm probably in a situation where they might go up because I feel like
They probably will.
a fairly good deal, early 2022.
Yeah.
I know luckily when we bought, as far as a home interest rate, our loan was fantastic. And
I saw a stat the other day that said 80% of people in the United States still have an interest rate of less than 4%. Mm-hmm. Isn't that crazy?
We had, I mean, the majority of people buying it last decade.
Sure.
My only regret is that we didn't buy more homes.
Sure, I know.
I think everybody's like that. Like, oh, there was going to come a time when we're just going to be at 5, 6, 7%. Like, man, we didn't take advantage of that.
Yeah.
But yeah, now we have to stay in the house forever, like everybody else.
Yeah.
So whether or not my wife like it, we love the house.
Yeah. You got rid of that carpet. You got to stay.
Yeah, the house is we completely gutted it, completely changed it. It was a 100-year-old farmhouse.
Wow. That's awesome.
So it was a unique property.
Yeah.
But we bought it because of land.
Sure.
I mean, we love our little house, but we bought it because of the property and location.
That's great. That's great.
Well, I think that's about it. I've drained your brain enough, and I appreciate you for coming on.
Yeah, thanks for having me, man.
Connected. Anything you want to throw out there?
Man, I would just say, make sure you've got a good relationship with, the team that you work with, right? You've got a good realtor.
Who you work with matters.
That's right. It does.
It
really matters because, you've got a good realtor because, what I always try and create is just a really good referable experience. I've got a great real estate agents that refer business. I've got great lenders, and we just try and always make that process smooth.
Yeah.
And I would tell people that, your rates, everybody's rates are going to go up this year. And if you haven't shopped your insurance, it's good to do that at least every 3 years, right? Just to it's either going to give you peace of mind about what you've already got, or you're going to find a better option with better cost and better coverage. So,
Good.
Thanks for having me, man.
Hey, I appreciate you coming on.
Yeah, man.
Thank you.